So a quick rundown on health insurance, the concept, the basic things you need to be aware of. You might get it through your work. You might get it through a government-sponsored program like Covered California. I'm going to go into too much of the detail there, but very often it's a conglomeration of probabilities, statistics, private funding, public funding, supporting it. Sometimes they call it a Frankenstein industry here in the States because so many things fuse in to kind of support it. But once you have a health insurance plan, you want to pay attention to a few parameters. Sometimes you might hear the phrase HMO versus PPO. Basically, HMO is a little bit more of an organized package of providers who are in-network, a little bit more negotiated and packaged things where you have to strictly stay in-network. So with a provider who particularly decided to accept or contract with that insurance. A lot of doctors don't like to do that because insurance can be quite intrusive and require other things. The phrases used like clawbacks are illustrative of a bit of that dynamic. And also what you hear with this general zeitgeist surrounding Luigi Mangione and whatnot. There's a reason people don't like the insurance, but it's kind of built into the dynamics of they're the house. They hold the probability, they pull together money and don't want to give money out. So be it, that's the dynamics. Besides all that, do you have an HMO or a PPO? If you have HMO, you typically just have in-network benefits, so you have to go with those in-network providers. PPO is nice. Basically allows you to go see any licensed professional. So any licensed professional can generate what's called a billing code claim, and then can give you that billing code claim like a receipt, and then you can submit that receipt to any PPO insurance plan. Basically, they're all going to have, for the most part, out-of-network benefits. General milestones and benchmarks are deductible and maximum out-of-pocket. Deductible, you have to pay that much before your insurance kicks up a lot more benefits or steps up more to the plate for you. And then maximum out-of-pocket is theoretically the most you're supposed to pay before insurance is supposed to pay everything. Pay attention. Do you have an HMO, PPO, which means do you have only in-network benefits or do you have in-network and out-of-network benefits? And then the second, pay attention to your deductible, pay attention to your maximum out-of-pocket. And then if you want to get fancy, you pay attention to what is your co-pay even before you hit the deductible, or what is your co-insurance after you hit your deductible. That's how much you have to continue to pay until you hit that next big milestone, the maximum out-of-pocket. I usually recommend PPOs. Be a little bit more expensive, but they give you a full freedom to see whoever you wish. Again, as long as they're a licensed professional, they can give you an out-of-network claim that then you can submit to your insurance. Sometimes called a superbill receipt. And then when you submit that, insurance based off your out-of-network deductible maximum out-of-pocket, they will then actually reimburse you directly as a patient some of the costs of that out-of-network claim. A lot of diversity there. You got to be careful. Some insurance plans are frankly scams. They claim out-of-network benefits, but then they honor the out-of-network charge at $30 a session compared to the in-network charge of $240. So that's a scam. Insurance companies need to be held accountable for that. They'll often highly guard and never reveal what's called their usual and customary fee. Is what they agree is the cost of a particular service. That's supposed to be based off of Medicare's rates, so like 100 to 120% of what Medicare pays for service. But there's a lot of diversity across plans, and some of them are frankly scams. I highly recommend that you customers get together, create a giant accumulation of data across all participating providers and patients who have insurance, and blast their firewalls. Actually just register what your deductible is, what your reimbursed amount is. I suggest everyone get together and share that information to give the middle finger to insurance companies in terms of this usual and customary fee, opaque non-transparency. Highly recommend that. Would love if someone out there did it.
You can do it!
But to be safe, usually larger commercial insurance plans tend to be better in that regard. That's a company who has employees or, certain thresholds of like 5 employees, or if they hit 100 employees, you get different kind of calibers of insurance that typically on average are going to be fair in terms of what they agree to reimburse. or what that usual and customary fee is going to be for an out-of-network claim that you submit and then get reimbursed for. But anyways, this is a little bit of the rundown. Again, big ones. You have a PPO or an HMO insurance. Typically PPO, you have in-network benefits and out-of-network benefits. HMO, you typically have just in-network benefits. HMO a little bit cheaper, but less freedom to see providers. Within those two categories of in-network and out-of-network, you both have a deductible and a max amount of pocket. Those are the big milestone thresholds to pay attention to. Once you hit deductible, you have co-insurance amounts until you hit max amount of pocket. When you're below deductible, you usually have co-pay amounts that you're paying. But this is a basic rundown of some of the parameters. You can call any insurance broker as well. Usually they're free. They're commission based on the insurance side, and they'll explain this all to you as well. If this prompted any questions, areas you wanted to clarify, or if there's other topics you'd like to hear about in this Wild Man Psychiatry channel, in which I'll attempt to impart my sense of understanding about it, let me know in the comment section below, and happy to engage with you.